Joining us now is Kobeissi Letters editor-in-chief Adam Kobeissi, doing some great work. I've ripped off some of your stuff for my RBI, Adam, so I appreciate you coming on the program.
Absolutely. Thanks for having me.
Sure. We know how bad the situation is. I guess the question I would ask you, and I know it's going to be a guesstimate, is how long does this state of real estate last? To me, that's the bigger question.
Right. And as you kind of alluded to, this all really trickles back to interest rates. You've had the Fed funds rate rise at one of the fastest paces in history, which has basically led to mortgage rates nearly tripling in a matter of 2 to 3 years. And now you have the situation where the only thing to buy is new construction. For the first time since '05, the median sales price of a new home is actually about to drop below the median sales price of an existing home. And this is also like a big factor of markets kind of beginning to price in a prolonged higher for longer Fed policy. If you look at futures, we went from having 3 to 4 rate cuts priced in 2023 to having none at all. And now rate cuts as of today are actually not projected to start until June of 2024. So as long as the Fed's fund rate stays as high as it is, it's hard to see a situation for the housing market supply situation to alleviate, particularly as we're kind of in a weird situation now where, ironically, now we need lower rates for lower housing prices, which is something we haven't really ever seen before.
That's why it's bonkers. And what you just said earlier is just as equally bonkers, that it's very close where the price of a newly built home will be, the median price nationwide will be less than the median price of a, quote, used, previously lived-in house.
Exactly.
That's nuts. Because home builders, they can manipulate things, right? They can maybe shrink the house a little bit, use cheaper materials. They've got the ability. If somebody during the pandemic bought a house with cheap or almost free money, prices soared, they're locked in. Unless they're like, a billionaire, they're not going to be able to sell and lose money on that home.
Exactly. And what you have to also take into account is with the prolonged period of low rates, historically low rates, a lot of these houses were actually bought by investors. So that took a lot more of the supply off the market. And now you see, that's exactly why new home housing starts are strong right now. There's really no other option. The new construction is what you're seeing on the market. Existing homes are not selling because people are, over 90% of current mortgages are below 5%, 26% are below 3%. And no one wants to give up those rates to take a rate that's now 7.5% or higher, in some states 8%, and sell their house. So it's really going to take the Fed to start cutting the Fed funds rate. And that probably doesn't happen until mid-24 before you see more supply come into the housing market. Even a little bit of demand is keeping housing prices up right now.
I said this in 2009 when everything collapsed. I wonder when some genius will be able to create a mobile mortgage, a mortgage you can take with you from one house to the next. Probably not. It's tied to the land, fee simple. I get it. That said, Adam, do you see this being a 2008 to 2010 or 11 like situation?
Absolutely not. I think we're in a very different situation. There have been increasing worries of some sort of a credit event, particularly as China's, starting to cut rates now, and there's different situations happening with central banks around the world. But this isn't an '08 type situation. I think what we will see is once the Fed starts cutting rates in 24, we'll see a slight correction in housing prices, maybe from 10 to 20%, maybe even 30%. And keep in mind, affordability has actually become, according to data, the affordability index is now at its all-time lowest point. Even if prices came down 30%, we'd still be in a less affordable point than pre-pandemic.
Yeah.
So I think we are due for a correction, but I don't think it's an '08 style crash that's coming.
All right, well, that's